Hello and welcome to BQ Prime. Joining us today is Mr. Kishor Patil. He is the CEO of KPIT Technologies. He's speaking to us a day after the company declared its Q2 numbers, which I may say so are blockbuster in a way. The company has raised its guidance by 7% for FY24 to 37%, while maintaining operational profitability in excess of 20% as compared to 19 to 20% guided earlier. In the second quarter, the company's top line grew about 10%. Mr. Patil, welcome to BQ Prime.
Good morning.
Sir, first up, what is giving you this bullishness to increase your guidance by such an amount in this current climate, sir?
Yeah, I mean, this, as you know, for many quarters, we have been talking consistently. There is nothing we are doing in a one quarter or 2 quarter. It is a very focused strategy which we have been following for a few years. And basically on back of the significant spend which is into new technology area and being positioned there as the best company to work for. So that is number one. Number two, the kind of relationships we have built with the large players over the period. And that momentum, and apart from that, as you know, some of the engagements which we signed last year, all that basically creates the momentum and continues the momentum.
Clearly, you're building on the momentum, sir. Let's talk a little about your margins. You are about 16%, if I'm not mistaken. You want to shore it up to in excess of 20%. What are your margin levers in play? You have already given out wage out, so that means you have absorbed that cost as well. So what margin levers are in play for all that operational profitability coming in?
Yeah, if you go back a bit, 3 years back, I said that our margins will be between 18 to 20%. And slowly and surely, we will increase the baseline. And our objective was always that we need to reinvest into technology, people, markets in order to grow faster than, in the market. So we have been following that. If you see, we were at 18, then we became 18 and a half, then became 19, now we became 20. So last 3-4 years, you will see this, going up. Now, this quarter was a very special quarter because we have last 2 years, we have given probably the best increments in the industry. And we have been in a position to absorb that and maintain the margin on the back of the high growth. And of course, the realization which we could get through operational and engineering productivity, that has really helped us. So the point we are mentioning here is we, of course, have many more levers to go up beyond 20%. But as a policy, we would first stabilize at 20%. As I mentioned, we will reinvest into the areas for the growth because that is growth is hard to come by. We have to double down on efforts we are doing, right? So in the current environment, we will double down on our follow-ups, double down on our strategy so that we can continue to grow. And then when we feel comfortable with this, then slowly but surely, again, we will increase the margins a bit. That has been our strategy. We have been very open about it. I think that's where we are. Now, what will bring the margins up? Of course, good growth is always there, good quality growth, growth at a higher margins, the new offerings and etc. Of course, we have certain platforms or this which gives us a little bit of small, but still the license and non-linear revenues. Also, the productivity in the fixed price project, as you have seen during the quarter, our fixed price projects keep on going up more and more. So the engineering productivity which we can have. So there are many things to do. And actually, as you know, that our average cost per employee is one of the highest in the industry because of the experienced people we have on board in order to address this new technologies. But slowly and surely now we are in a position to bring up the other part. So I think all these are our levers which we have.
Okay, so how are you seeing the deal making so far? If I'm not mistaken, you clocked a TCV of 156 million in the July-September quarter. Are you witnessing any slowdown in deal making due to high interest rates and high inflation in the US? Are clients cautious on spending right now?
So the good part about it is we have, to some extent, actually, we have come out of our deal making. We are building relationship and partnership with the client.
Okay.
And we are getting 3-year, 4-year views on their critical programs, and that's where we are really spending. So to your point, we are not really, in that sense, quarter to quarter kind of a revenue and delivery kind of earning. We have a longer term view.
Okay.
But of course, we are cautious of the fact that, to your point, electrification, some car sales are less than the strike, all that. We are aware of it. And we are keenly looking at whether it will have some impact on any of my client, and then what we can do to help him out proactively during that process. That is what we are focusing on. So we are aware of certain macros, kind of environment. But what we are very sure about is a medium-term, fundamentals of our business strategy, fundamentals of where KPIT is there, where we are making the investment. So what we have to find out is, if at all there are a few things, tweaks here and there, how we get over that.
Okay. Clearly, I think you're balancing your US business fairly, given the challenges that are there. Let's talk about the big deals that you struck in the recent past, the one with the Renault and as well as Honda. How are they progressing, sir?
I think, both of them are doing very well. So when actually we have been in a position.
Have the synergy started flowing into your numbers from those deals?
Yeah, so of course. Otherwise, strong numbers I had mentioned in the beginning of the year that will come. But more importantly, I must say that, and I have been keep on saying it, but it's not at every client we go and announce. So similarly, there are other clients we are engaged in the similarly strategic manner, but there's no one big deal announcement. So that's why I'm again and again coming back that our strategy is to build a relationship. This in one of these two cases, fortunately, we were in a position to announce that engagement, but it is the same strategy with the other clients. And I guess I think we are making progress, and that's what we are looking forward.
So you're talking about a long-term focus and not a quarter-to-quarter business that you're aiming at. In that respect, what is the outlook after 2024? You're saying 37% growth in FY24. What after that? Where are you headed? What are your long-term goals, sir, in that sense?
I mentioned to you our medium-term fundamentals are very strong. We are very clear that we talked about New Year only in the month of after March quarter. That's when we come up and give a color. But what I have said always, this year we are very happy the way it turned out to be, turning out to be and turned out to be. But we have said that consistent medium-term environment is there. There's a long-term view about the spend. There's a long-term view about how we are there. So we will have a momentum going forward in the medium term.
All right. Thank you so much, Mr. Patil, for joining us today. All the best for what is going to come. I hope you meet your 37% target. Thank you, viewers, for joining us. This is Tushar for Beauty Prime.
Thank you. Thank you so much.